Laurie, thank you so much for coming on Startup Steroid today and sharing your story. I'm really looking forward to this conversation. You have a really varied background with, starting out in corporate America, investing in the public markets, and then more working your way to the private markets, and now as an angel investor, and obviously working with Newchip. So we're going to explore that entire story. But just first 2 seconds, tell us a little bit about yourself, how you like to be introduced to a group like this.
Yeah, no. So a little bit about my background. I started in corporate America, and I've always been on the sales leadership side. So the companies that I worked for from all sizes, from a small growth company to a very large company to companies that were mid-sized companies, have been sort of leading sales and leading go-to-market and on the sales side. And so I've worked, like I said, in corporate America. One of my most fun companies was one that was small and growing, and that I helped grow. It was real rewarding to grow it to a point where we were acquisition target, and we were acquired by the largest at the time, HJ Heinz food company. And that was
Wow.
kind of successful and great to, kind of transition to that, and then exit that, and then start it all over again. And so being kind of in both a very large company and in a small growth company, I think the funnest place to be, and the most exciting for me at least, is a company that has made it a into that growth stage, and is growing and scaling. They have a product market fit, they've got traction, and they're growing. And so now I'm actually in Newchip, which we'll talk about a little bit later, and they're in that stage. So that's kind of exciting.
That's fantastic. Yeah, I'm really excited to get into Newchip. But before we do, let's talk about your investment journey, because you started out investing in the public markets, like most people, investing in mutual funds and then stocks and things of that nature, and then sort of transitioned into the private market. Tell us about that experience and what you were sort of expecting throughout that journey.
Yeah, so started like most people, where you would invest in mutual funds, and you could, there's a route to go where you're invested in stocks, but it's a diversified portfolio. Maybe you're not managing it directly. A lot of retirement accounts are managed for you, where you decide what type of risk you're willing to take, whether it's conservative or growth, but it really isn't managed. It's managed
Right.
by another third party company. But where I really started getting a little bit more enjoyment was actually going after and investing in sort of the trendier type, what's on trend. And a couple of things come to mind early on, and this was, gosh, 20 or so years ago when I first started investing, and to really invest in companies that were just get hot and just kind of gaining momentum. And some companies that come to mind back then were Dell or were Amazon. And not all
Wow.
companies were successful, but if you could kind of get in and invest in a company that then really took off, that was really, as anyone could imagine, a very exciting thing to happen. And again, to sort of be dabbling that in making those decisions and kind of predicting which would be the growth company or the unicorn. So I kind of enjoy doing that. And about 5 years ago, I started to really become very interested in the startup world. Actually went back to UT Austin and went through a program that was all about commercializing technology. So
Oh,
Austin's
wow.
a big tech spot, and this
Right.
was really sort of the MBA, which I had already, but the similar program, but all about starting a company or being in a startup company and commercializing technology. So when I was in that company, we get a lot of startups and people starting companies. And so that is when my very first investment was with Newchip, because they came to the university, they came to our program, and they were looking for people that were interested in either joining them at the time or just interested in somewhat partnering with them or investing in them. And so, that was kind of my first dabble into investing in a private startup company. And from that point, I thought, well, this is good, and this could be, this is a great vision the CEO had, and really could see how that was solving a problem. But I thought, I'm one person, and I'd love to invest more. But I need two things. One is I need to, find deals, right? I need to get this deal flow. But even secondly, and more importantly, I'm not an expert in all areas. I'm an expert in the area that I've worked in, which is the food and consumer products, but not so much an expert in life sciences or B2B software or a lot of other areas that could be great investments, but not really understanding the ins and outs of the industry could be a little bit daunting to know that you're making the right decision or know whether or not the product is really unique or is it just another product that, is a Me Too product and might not be successful. So from that point, I decided to join an angel group, and I joined Central Texas Angel Group here in Austin, which is a very big and active angel group with a lot of education and deal flow coming through. But the main benefit of that was to really have other individuals that would vet deals and screen companies, but really kind of be experts. So we've got life science experts, B2B software experts that would really be able to understand the industry and real kind of, vet and ask some of the tough questions like, you don't really understand sort of what are the risks of the industry and what makes a company successful in any part of that industry. So if I were to have to say, like this how my investment thesis has kind of transformed or how it's come about, I would have to say as someone, now there's different types of investors. There's the type of investor who might have started in the startup world, may have started a company, may have grown a company, may have sold that, and then they're looking to take a lot of money and kind of put it in a lot of different places. I'm the type of individual who saved from a more corporate type salary and wanted to do something a little bit more hands-on with it and a little bit more to kind of satisfy my just my interest in startups and really kind of new innovation. And so being that type of an investor, my investment thesis started out as saying, I'm going to take, 20% of my income. I think it started out as 10% of my total savings. And then after a while, then you've kind of run out of that money, then you're up to 20%. But it's to really say, I'm going to take this amount of money and I'm going to invest it in companies. And I really want to be diversified. So rule of thumb is you really want 12 to 20 companies at a minimum to really invest in. And you really just kind of want, at least I did, want it to be diversified. So I came from one industry, but I didn't necessarily want to invest in that industry. I wanted to invest in a number of different industries over time. And I think one of the things that I learned as a new investor is there really is, you have to be patient. There's a timeline to it. And so, you can't invest and then expect that 3 or 4 or even 5 years later that there's going to be an exit, so you have to be patient with it. You have to expect that it could be 6, 7, 8, 9, 10 years.
10 years.
And that definitely it is risky because you could invest in 10 companies and, maybe one of them will be successful. And so all of these things you really have to appreciate and, really kind of just, understand and be okay with. Uh,
Absolutely. No, I mean, you make so many great points. Working with the angel group and getting that knowledge base, right? The experience and the knowledge other investors have, and relying on that to go through your process and make the decision. And Absolutely perfect on diversifying, because generally, most people, especially people who are working a 9 to 5 or a corporate job, don't have hundreds of millions of dollars to invest. They have a very set amount, and you want to make sure you diversify that across many investments. You said 12 to 20, which is perfect. So this way, even if that only 5 or 10% of your investments succeed, you can get some returns even if the others fail. So perfect. I didn't know that you met Newchip through the university program, which is fantastic. So let's talk more about Newchip. What was that initial vision, and what got you excited about that?
Yeah, so initially, the vision, which the CEO, Andrew Ryan, saw as an opportunity, and which he actually shaped, was the Jobs Act at the time. This was
Mm,
back in 2016, where it was making it possible for companies to raise from non-accredited investors, really kind of opening it up so that companies could literally, prior private raises, you'd have to be accredited to be able to invest in it. And with the Jobs Act, there were a lot of changes made, and one of them was to open it up to just anyone to invest up to certain levels. But we're talking about prior, maybe 1% of the population might, as a
yeah,
startup, you could access. And with the changes, literally anyone could invest. So it really opened up a huge market. So just kind of looking at a fundamental change in funding, and kind of opening up just the whole entire private equity market to just standard individuals, and what that might bring to
hmm,
what the opportunities that could bring. And so one thing that New Chip looked at was how to sort of um, facilitate that, with, at the time, there were all of these funding portals that were, if you could imagine, like back then, Kickstarter, which was purely non-equity, but all of these types of portals were now going to be able to raise, equity raises,
right.
Reg CF raises, and really,
Hmm.
how can you take all of this activity and really kind of aggregate it onto one site. And one thing that impressed me about the CEO, and kind of one of my main thesis today, is someone that has a big vision but can very execute on it and build a company. And so over the next, I would say, 3 years, because I stayed very close, and I was, like I said, an early investor, and Newchip pivoted to help. There was really a need to help. There were so many companies out trying to, well, I think the number one challenge that companies have is to be able to, one, scale, but being able to scale, you need money. So it
Hmm.
really was surrounding in, how do you actually raise money, where do you go to raise money, and how do you target investors, and it's this whole big, unsolved problem. The
Absolutely.
traditional accelerator, up until this point, because there's accelerators, the traditional accelerator is somewhat limited in terms of having a very specific geographic, companies or CEOs would have to be in a
Yep.
particular city to take advantage or relocate to that city, and then being very space constraint, where maybe only 8 to 10 companies at a time
Hmm.
could be admitted to the accelerator. And
Right.
so there was this real problem where too many good companies, CEOs, were not really having access to that fundamental knowledge of how to raise or being connected to investors. And so that's kind of what started the current model with Newchip today, is to help a vast number of companies really understand what it takes and what successful companies do to scale, and then how to go about getting investors, what investors to target. And we actually, Newchip has a whole team right now, 50 going on, growing team. So, it's admissions, and then it's a whole startup success team that works with the companies once they're onboarded, with mentoring and workshops and helping them with their pitch deck and helping them to refine their pitch deck, and really kind of helping them to understand what's important to investors, what KPIs should they be tracking, how should they be, what should they be thinking about, how to actually go after investors. And then we have a whole investor relations team to help connect investors to our companies. And it's really about kind of matchmaking to say, we've got this company here and this investor here, and it's all about sort of finding the right matches so we can kind of make those matches.
So I want to get into the investment relations side a lot more, because I know that's the area of your expertise, but it's so important, the journey that you just laid out. I just want to very quickly summarize, make sure I understand it correctly, is that, most entrepreneurs wake up with a brilliant idea, and then the hardest part is the execution on that idea. So now they actually have to build a company around it. If they achieve that, the next skill set is communicating that to the investor. And that's where Newchip really can help you out, where now you're developing a company, but at the same time, you have to understand what the investors are looking for and how to communicate with them. So that really is a very fundamental skill set that entrepreneurs need to have, which is essentially what Newchip is providing them. So I think that's a fantastic mission for the company. Talking about the investment relations side, tell us about what kind of investors founders can expect to be in front of once they sort of go through your program, and what's the communication like? How do they interact with the investors?
So those are great questions. And so what the investor relations team does is we continue to build our network out. We're very proactive in terms of outreach every day. A lot of my day is spent talking to different types of VCs and family offices and angel groups, and really kind of understanding their process and what their sweet spot is, what they invest in. And so we really kind of have a lot of different tools and ways that we connect our startups. One way is through, again, I just mentioned, is our IR team really kind of has a network. And so we can, in a sense, given a company and given their industry and given their stage, look to see what investors they might actually be a fit for, and then and make those introductions. So that's a warm introduction. If a company, a lot of times, we over time we build and we have the same conversations and we send deal flow to the same individuals. So we can get an audience with an investor, which is a lot more difficult to do if you were just cold calling that investor.
Right.
So we facilitate that introduction. The second way is we actually have every 2 months we have an online demo week, and this is a virtual demo week that our companies participate in. And they actually have to they can't participate in it on day one. We actually take them through, we have content online that they go through, and then they work with their mentor, and we actually take them through pitch deck reviews and coaching. And so there's a number of things they would have to do, and they have to get their pitch deck kind of reviewed, and so we do this all to really help them and help them be ready to put their best foot forward and present at the demo week. And so we have over 1,000 investors that
Hmm.
attend and watch the demo week. And at once they see the presentation, they can at that point, you know, um, request to meet with the company, and that's one way. But even more so than that is our team. As at that point, we start to really kind of outreach our investor network and say, hey, you know what, we've got this great company. We'd love to introduce you to them, and we facilitate that. The other thing we do is we have office hours, and what these are is, a lot of our investors, they're willing to, have us select companies in their industry, and all they do is sign up for a 90-minute slot, and then we invite companies to that 90-minute slot to each meet with the companies for 20 minutes and kind of have that introduction meeting.
Wow.
And so we facilitate that meeting as well, and that's a big part of how we put our investors in front of companies. And the different types of investors we work with. We work with VCs. So anywhere, I think the sweet spot is, the early venture capital companies, the ones that work with, companies that, some are even working with pre-revenue company, but early stage companies that are, again, early stage VCs. Some are very industry focused. I have some that just focus on the food industry, some that focus on climate change. So across all industries, but some very specific, so we can kind
Right.
of guide companies that are in that industry to them. We work with some corporate VCs. We work with family offices and also angel groups, as well as angels. So across all of those categories.
That's fantastic. And because of your, the breadth of investors that you're speaking with, it covers everything from sort of pre-seed, pre-revenue type companies all the way through, I think, Series A, if not Series B,
Yeah.
level investors, right?
Yes. Yeah, that's
That's
correct.
a fantastic sort of breadth. So any startup that is in that area, which is probably about 70% of the startups out there, they can connect with the right investor through your program. So that's
Yeah.
fantastic.
Yeah.
Uh, what is the process once the startup has sort of, you've given them that warm introduction? What is the process that you expect the startup to go through? Do you stay in touch with them, give them guidance? How does that work?
Yeah, we do. I would say that, it's all investors have a different time frame in terms of how fast they move. For example, angel groups are very structured in terms of, this is how our funding cycle looks, and
Hmm.
we put you through, you present here. If you make it through this stage, then you go on to this stage, and then if you make it through that stage, then we start due diligence. And so that's a very timed, very date specific type investor.
Right.
Angels will be a lot more fluid. And a lot of times, angels like to, see companies that they're passionate, they may know the industry, and a lot of times they're very hands on. And angels are great too for, if they feel like they can't help a company, they may be able to introduce the company to other investors in their network, or maybe even channel partners and strategic, type introductions. VCs, we work with a lot, kind of getting back to your question, where it's a venture associate who screens the companies to see if they're a fit. Do they meet their particular requirements? So for an example of that, climate change, for example, or any kind of impact company, there has to be a lot of investors now are really kind of wanting to see, what does that impact look like? Is it measurable? What if
Right.
you are having an environmental impact, what is that specifically, and how does it relate to your product? So it has to be, very specific, and they'll kind of review it, then they'll go into due diligence, they'll take it back to the team will go into due diligence. For example, I have one investor where they've been talking to a dozen of our companies, and for a few months now, kind of going through their process of due diligence, and now they're getting to the point where they're going to write the term sheet. And so it varies by investor, but again, it's taking, from the very first step is, do they really fit the investment thesis, or the fund? If it's a fund, do they fit that fund thesis? I mean, it could be a great company, but if it falls slightly out of that fund thesis, then sometimes I've even said, I've had investors tell companies, we're raising for our second fund right now, and I think you're going to be great for that second fund. Or you might not meet our traction requirements today, but by the end of the year, by next year, you will. So circle back with me. So it's, again, building that pipeline of not only getting funding today, but also kind of building the pipeline for funding in the future.
Mm-hmm. No,
Yeah.
that's fantastic. And you're so right in that, I know angels who've watched a pitch, maybe done a 1 hour deep dive call with the founder and written a check right there. Or after demo day, they'll go through, have one call and write a check. And that might take a couple of days to a week. And then I know, venture firms that have a 3-month process where, you're going through tons and tons of due diligence. So you're absolutely right. Any final thoughts on Newchip? We've covered sort of the investment side. Tell us a little bit about the actual course that the founders go through, and just so we can understand the process a little bit better.
Yeah, sure. So we actually have three different segments. We have a pre-seed, and we have a seed, and we have a Series A. And so
Okay.
each of those, when the companies come in, they're actually, all the companies are launched in the same week, and they're all onboarded together. And so our admissions and startup team kind of takes the companies in, and it's a very formal, where they're kind of given what to expect, and specific activities, and it's all kind of laid out in a very concise way. But there is an online portion of it. The online portion of it's very much like if you were to take an online MBA course. So it's kind of going through the modules, and the modules will, depending on your stage, so a Series A would be a lot more putting the correct documents into place that you need to, creating your deal document room, and organizing it, setting your KPIs. Whereas, for Series A, it's going to be kind of more advanced, because some of those things have already been, it's going to be more about growth and scaling and expansion and that type of thing. And that content is module specific. And so the companies will go through each module online, but at the same time, we have one-on-one mentoring, which the companies are paired with a mentor in their industry. We have over 300 mentors today, and these are top-notch individuals who are CEOs. Many of them have had startups themselves, and the mentors work with the companies one-on-one to help them in any specific areas that they want to be coached in. In addition to that, which I think is really cool, one of my favorite parts is we have masterminds, and the masterminds are small groups, 8 to 10 companies that are grouped together, where the CEOs collaborate and talk and share ideas. And so the masterminds, could be on a particular subject or particular area, and then we have a staff member sort of act as the host, but the CEOs all really kind of run the conversations and collaborate and share ideas. And so we do those masterminds, and those happen monthly. And then literally every day we have different workshops, and the workshops are around, a 3-minute pitch, an elevator pitch, just different things, different types of, some industries like raising from angel groups, what things, what that process looks like. So we have different workshops, and those workshops are available, every week. We have anywhere from, several workshops a day. So the companies can
Oh,
kind of
wow.
choose which workshop they want to participate in.
Right.
And we kind of, like I said, kind of, especially for the companies that haven't raised before or pre-seed, we really want to encourage them to take advantage of like the pitch deck reviews and
Right.
all of those different
Absolutely.
things. Yeah.
Those pre-seed companies, they need a lot of help with the pitch deck presentation. Tell me a couple of other things that are covered throughout the process. You already mentioned a lot of resources, and resources that more advanced companies could use. What about the very early stage companies?
Yeah, so I mean, very early stage, I think that's going to be most important to the very early stage companies will be a lot of the mentoring that they get from the mentoring team,
Mhm.
just to kind of work with them and really kind of help them with try to determine go to market strategy and some of the things like maybe around branding and some of those things. We do have staff that will host Ask Me Anything sessions. And so a lot of times that's very good for the companies to go with. One thing I failed to mention, but just kind of just thought about it is once our companies, go through the stage of meeting investors, if they get a term sheet and they don't know if it's a good deal or not a good deal, we actually help them with that. We have
Oh, wow,
staff
that's
that can
fantastic.
look at and kind of give them, we don't tell companies whether they should take the deal or not, but they may just look to see if there's anything, that looks, abnormal, or, they might
Right.
be able to answer questions that the companies have. So we do help with that. We also help companies with valuations. I mean, a common question is like, how much money should I raise, and should I raise it all at one time? So as a company going out
Mhm.
and raising money for the first time, I may want to, I don't know, like how much would be appropriate. Should I raise a small amount and then come back in 6 months and raise another amount? Should I try to
Right.
raise as much as I might need for a year? So really kind of identifying what is the best, goals to have for fundraising,
Right.
and the valuation as well. We help with that. We actually, companies go through, and we have a third party company that comes in and helps them with valuations.
That's
So
fantastic. A lot of resources. I'm going to ask you the question that I ask all investors. But in your case, because you're looking at such a wide breadth of companies, this might have three or four answers. But the question is, what is the one thing that the founder must have before they get in touch with you? Without that, don't even bother. You're going to get screened out.
yeah, I mean, everyone is different. For me personally, and this is where your investment thesis comes into place. So with me, I because I and also my background is being like on the sales side, is really having a good strategy. For that go to market strategy. And
Mm,
so that's one thing I really look at, is, first and foremost, I look at, is do I have belief that the CEO can build a company? So it's not only about, is the CEO smart, does he have experience or she have experience in the industry, because that's always important, but can they build a team, meaning can they surround themselves with other people and actually build a company, and also pivot if they need to pivot, right?
right.
So if you can, you never know what's going to come your way. COVID, no one kind of anticipated COVID, and the best CEOs and the best companies were those that were able to pivot whatever that challenge
Mhm.
were. They were able to see, what can we do, and where can we pivot, and where can we grow, and how can we do that, what opportunities can we take advantage of. So being able to, with the CEO, being able to do that with their team, that's very important. But once they've got that, then the question becomes, you've got a great product, you found a problem, you have a solution, but like where do you go with it? Because if you have a great solution and it could be applied to anyone, like, what's the roadmap to get to people? So you have to have a very clear and detailed roadmap of how you're going to go to market and which group of people you're going to sell to, and then how are you going to reach those people, and really a specific plan, because if that's not in place, it's going to be very challenging.
Absolutely. Just saying that we're going to run to a bunch of Facebook ads and we're going to get sales is not enough.
Yeah.
No.
Yeah, or
Yeah.
you see it a lot of times, like in the market. Like, this market is huge. Like, it's like $40 billion, and we're going to get 5% of it. Well, that's good to say, and that's a general number. But how
Right.
specifically are you going to get there, and where's that number coming from? So being able to kind of build that number from the ground up with a very specific plan. Yeah.
Absolutely. What people forget about TAM is that it's not just one-way calculation, top to bottom. It's also bottom to top, and you have to understand that.
Your serviceable market that you are able to reach, and really have a good plan in place to be able to be relevant and competitive within that market that you choose.
Exactly. One of the funniest things I ever heard was, friend of a friend of a friend was starting a restaurant, and we asked him, "What's your TAM?" And he said, "The entire world, because everybody needs to eat." Well, for your restaurant, that doesn't make sense. But anyway, thank you so much for coming on. Any final thoughts to leave us with?
No.
This has been a fantastic conversation.
Yeah, no, thank you so much. And just exciting to see, what product you've built as well, because I think it really gives another avenue for companies and startups to really connect to investors. And I think that's great. I think anything that the ecosystem can do to make it easier and facilitate companies growing and finding those connections to investors and to really good strategic partners is invaluable.
Absolutely. And that's why we're here, right? We want to serve the founders. We want to help them, people who are making the difference, coming up with those innovations. We want to support them so they can actually bring them to market. Laurie, thank you again. I really appreciate you. Let's stay in touch. And thank you again for coming on today.
Very good. Thank you.
Bye-bye.
Bye.